Good morning. These are the things that matter most for the U.S. pre-market. Futures are wavering near record levels. Investors are waiting for retail earnings and Fed minutes. AI optimism is spreading beyond chips, and the Strait of Hormuz risk is back in the oil and shipping channel. The central question for Wall Street is simple. Can the AI-led rally keep broadening if energy risk, consumer proof, and the Fed's rate path all need confirmation at the same time? Start with the record rally problem. MarketWatch reported that U.S. stock futures were little changed as investors weighed the Fed's next move, while Yahoo Finance flagged retail earnings as the next test for the Dow, S&P 500, and Nasdaq. That means the market is not only asking whether megacaps can keep leading. It is asking whether the consumer and rates can stop becoming a drag. The cleaner side is quality growth with visible cash flow. NVIDIA, Microsoft, and Alphabet. Pressure sits with long-duration growth, weaker retailers and companies that need easier financing to justify their valuations. For private investors, the useful filter is confirmation breadth. Earnings, guidance, and yields all need to support the same bullish story. Second, the geopolitical channel is active before Wall Street opens. CNBC reported that Strait of Hormuz shipping has ground to a halt ahead of a U.S.-Iran ceasefire expiry. That matters because Hormuz is not just a headline risk. It can move crude, fuel costs, freight, inflation expectations, and treasury yields before companies report the damage. Potential beneficiaries are Exxon, Chevron, and selected energy security or defense names if oil and geopolitical hedging confirm the move. Pressure sits with airlines, transports, and rate-sensitive consumer names if fuel and yields rise together. The private investor takeaway is to separate a fear headline from a transmission map. Oil, shipping, yields, and transport margins have to agree before the risk becomes market-wide. Third, AI is still the market's strongest theme, but today's hidden mechanism is adoption quality. MarketWatch reported that the AI productivity payoff is coming and identified stocks positioned to capture gains as adoption spreads. Yahoo Finance also reported that an anthropic outlook helped lift Wall Street before the bell. The AI question is no longer only which company mentions artificial intelligence. It is which companies can turn adoption into measurable productivity, revenue, and margin support. The cleaner side is the AI infrastructure and platform group, NVIDIA, Microsoft, and Alphabet. Pressure sits with speculative AI names where the story is ahead of adoption, margins, or balance sheet proof. For private investors, the useful filter is proof quality, customer adoption, pricing power, free cash flow, and whether AI saves costs or only raises spending. Fourth, the underappreciated story is the consumer earnings test. Retail earnings are not just a mall story. They are a read-through for pricing power, credit stress, wages, freight, and whether households can absorb higher costs if energy and rates stop helping. Walmart, Target, and Home Depot are the names to watch because each one tests a different part of the consumer. The cleaner side is retailers with traffic, value positioning, and inventory discipline. Pressure sits with discretionary names if shoppers trade down or delay big-ticket purchases. The private investor takeaway is not to trade the earnings calendar. It is to watch whether consumer companies confirm the same economy that the index is already pricing. Here is the stock-led watch list. In AI adoption proof, watch NVIDIA, Microsoft, and Alphabet. In Hormuz and energy risk, watch Exxon, Chevron, and United Airlines. In consumer proof, watch Walmart, Target, and Home Depot. In rate-sensitive market breadth, watch the Nasdaq 100, regional banks, and small caps. Market bias, constructive, but confirmation-dependent. The bullish version is that AI adoption broadens, retail earnings stay resilient, and Hormuz risk does not turn into a lasting oil and yield shock. The mistake to avoid is treating an index near records as proof by itself. Today's better filter is cross-market confirmation, AI adoption, retail guidance, oil, shipping, yields, and market breadth all need to point in the same direction. That is the U.S. pre-market brief for Monday, August 17th. I will be back with the next brief before the next open. Research context only. This briefing is not investment advice, not a trading recommendation, and not personal financial guidance. No targets, stops, sizing, or portfolio instructions are provided.